Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you today.
Mike, the market's a little wobbly right now. Is this something to be worried about?
Well, today we're going to get a Federal Reserve meeting. We're doing this Wednesday, a few hours before that, and I'm sure the market will have its gyrations, and that's what everyone will talk about. But your question, I think, is a lot more important because it's more about the bigger picture of what's going on with the stock market. And we did see on Monday a pretty dramatic decline in the Dow and the S&P 500, and even oil stocks, on a percentage basis that day were down pretty good. And really, the market has been coming down now off of a recent high that was set around Labor Day. And funny thing is, the same thing happened last year. At the start of September, the market took a little bit of a dip. But the good news for people is that on Monday, the VIX indicator spiked up, went up over 30% during the day, got up to 29 just about, and then came down. It's now trading at 21.69. So what's the significance of that? For people who've never heard of it. Well, what the VIX measures is the premium that traders are paying for volatility in the options market. Now, when you have a bit of a market dip, they often end in panic selling. The sellers get washed out, so to speak, and then the decline comes to an end. The declines are led by sellers, and when they're done, the decline is over. So in the options market, though, there's people out there that instead of, selling stocks, they'll go and buy puts to hedge their positions. And when they panic and scramble to do that, it drives that VIX indicator up. Because it's measuring the volatility premium. So that these spikes in the VIX tend to coincide with the ends of market decline. So looks like this is once again classically happened. The VIX spiked and now it's coming down, and the market has come off that intraday low on Monday. So on one hand, the positive thing is I think the recent September drop in the market's probably over with. I wouldn't be shocked if, no matter what happens today with the Fed, that let's say over the next couple of weeks, going into November, or perhaps even Thanksgiving, we don't see the market, go back up. Now, the second thing though is more troubling, and that is that the internals of the market have been declining now since early June. And what this means is the percentage of stocks advancing with the stock market has gone down, even though the stock market was going up into Labor Day. So the rally was led by fewer and fewer stocks. My favorite indicator to track this is the percentage of stocks above their 200-day moving average on the New York Stock Exchange. At New Year's, that was at 90, meaning 90% of them. Yesterday, it was down to 55%, and in in June, it was 87%. So that's a dramatic decline from 87 to 55. And most of the decline wasn't just, last week, but going on in August and July while the stock market was going up. So in other words, more stocks have been going down than up, since early June. People don't realize that's happening when they just look at the S&P and the Dow. But in the past 20 years, when the CITIC indicator has gone below 60, it'll bounce back up, and then over several weeks or even several months, and then peak out again, and then you'll get a more significant correction in the markets after that. And so I think that's probably what is setting the stage. I think short run, we bottom. We're probably going to, rally now into November. And then I just have to look at things after that. Maybe it can rally into New Year's. But regardless, at some point, it's the next rally. When it runs out of steam, I think we'll be setting the stage for a 15 or 20% market decline. We haven't seen, we saw one, of course, when the COVID situation hit. But if you forget about that, we saw one in 2018 and 2016, and, so they tend to happen every couple of years normally. And we've had a tremendous run up in the financial markets. So I think, it's probably gonna come or start in several months. And we've seen weakness in a lot of things, which typically, is part of a topping process. For example, Bitcoin, had a tremendous run, but it peaked out in the summer, when it got around 55,000, and it fell, briefly below 40, and it rallied, up until a couple of weeks ago, into the news of El Salvador, forcing the people in their country, business people, to accept Bitcoin as payment, declaring it would be a national currency. The crypto traders bought ahead of that news. They've been selling it, and now Bitcoin is hanging on 40,000. And I consider it one of the most speculative elements, or the most speculative element of the financial markets, the crypto NFT market. So, it's topped. It's made a double top over the summer, and it can break 40, but way before the stock market, goes into a real correction or more of it declines again. So, and there's lots of stocks you can find inside the stock market that also are not trading well. That is not to say there aren't pockets of strength too that are, and I think those are the things we're focusing on. If you want to be buying and holding stocks, which I do, I say these things. I'm not selling everything I own, but I already bought last year, so that's. But I want to analyze things objectively.
Well, this reminds me so much of that horrible, tragic condo collapse in Miami, where the rebar started to corrode, but you can't see it. But as the internals start to rot, the outer concrete just can't hold everything up for so long, and then it all comes down.
Yeah, that's a good parallel for sure. I always say, though, in the financial markets that, if you say you're in that building and it collapses on you, there's really nothing you can do. I mean, you just pray, you're not crushed. But in the financial markets, it's not quite that dire, because there are things that do go up and benefit, when the stock market declines. Historically, the bond market has done that. But also, many times gold and silver have gone up. So in 2018, the stock market fell 20% in the last quarter of that year, and gold did well and had a great rally. And I think we're probably set up for a similar type of situation, because in 2018, gold had a bit of a dip in July and August, and then the stock market, began declining in October, and gold rallied. And sort of the same thing has happened now, where gold and silver have dipped in the past couple months. They now appear to be forming a new bottom around the 1750 area on gold. And that dip in 2018 was associated with the Federal Reserve planning to be more hawkish on interest rates. And the market didn't like it and fell, and the Fed did a reversal around New Year's, a complete reversal. Had to abandon that policy. And now we're sort of setting up a similar situation where the perception is we're going to have a more hawkish Federal Reserve, that they're going to pare back some of their quantitative easing bond buying operations starting in November, December. We'll find out more details today, and then eventually raise rates. At least that's going to be their plan, to raise rates at the end of next year. It seems like that is also going to be something they're going to be announcing either today or before the end of the year. And just this type of, being a little bit more hawkish in a financial market that is so overvalued in terms of price to earnings, price to sales ratios, where the speculation's gotten so out of control, people are believing that something like crypto can, replace the dollar or change the world, and the NFTs are real art when they're just, something you look at on a phone. It's a lot of silliness, much as we saw silliness in 2000 with people saying internet stocks that lose millions of dollars and are on the path to bankruptcy are worth buying because they have page views. And we saw gurus appear then, on television and Wall Street, and analysts predicting these things just as we do today with people like Cathie Wood. And they get mass followings, and that's, where we are in the markets. It's a cycle that repeats. When people believe in these sort of things.
Yeah, in the 90s we had people paying extraordinary amounts of money for sports cards.
Yeah, at least you could drive them and show them to people.
Well, but what I mean is like sports trading cards, for football, hockey, baseball. People were paying incredible amounts for somebody's rookie card, $500, and then 3 years later it's worth $5.
Yeah. And the funny thing is, you look back on that $500, Jose Canseco rookie card.
Yeah.
I think that was one of the hot ones. And there was a Billy Ripken card where someone wrote a curse word on his bat. It was a rarity and selling for some crazy, maybe that was 5,000 in that. But now, it's virtual images. It's strange, but it's going for more than 500 or 5,000. Now they're going for tens of thousands. I guess that's a sign of a bigger bubble or more inflation. It's something else.
It's called too much money and don't know what to do with it.
Yeah, that's for sure. But the things I've been talking about, a simple 20. Maybe the market declines 15%, at some point instead of 20. But either way, in the end, the trick is diversification, to navigate markets in the long run. And when you do that, you don't really need to be too alarmed. And in fact, if you stick to being diversified in good sectors and stocks, then you can avoid these crazy things like NFTs or crypto, and just focus on, what's real. And one of the parts of the market that does look more positive to me, as we're speaking, is the energy market. In July, we saw energy stocks begin a little bit of a correction. And historically, they do that seasonally. During the summer, make a peak as the driving season kind of hits a crescendo, and that correction seems to be a little bit played out to me. The XLE ETF is sitting on the high it set last week. So even through decline recently in the stock market, it's held up. And if things do play out similar to 2018, what happened was, gold fell ahead of the Fed being more hawkish. And then when they weren't as hawkish as people thought they would be, gold exploded. So I think that could be what is lining up with gold, silver, and the commodity markets before the end of the year, that they should turn back up and start to rally again.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, uranium has had a huge charge upwards. Is this almost like a GameStop or an AMC play?
Well, I think it is. And one of the interesting things about what's happened with uranium, and I didn't realize this till last week, so, and let me pull something up so I can give you the figures, but, the Sprott company launched a uranium trust, and, just a few months ago. And that, it's an ETF. I don't have a position in it, but it's a Sprott ETF holding physical uranium and contracts for uranium. And what's shocking about it, though, is it's got a market cap of $1.47 billion. That's a huge market cap for a uranium ETF, really any commodity ETF. I own ETFs of a couple foreign countries, like Turkey at the moment, and I don't think it has a market cap of half a billion, 500 million. And the market cap is price times the number of shares outstanding. But here's the thing about this ETF. 1.47 billion of assets in uranium. Well, the entire uranium market every year isn't a little bit more than 10 billion. So they have bought up much of this year's production, over 10% of it. I think that has had an impact on uranium prices and perhaps created a self-fulfilling prophecy where you launch the ETF, you buy up uranium, which helps drive up the uranium price, which helps drive up the ETF, which gets the attention of the masses. They see the ETF go up. They want to get involved in it. They buy it. Their buying helps drive up the price, which also helps explode some of the uranium stocks, light them up like they're rockets. And we've seen like stocks like Cameco, which is the biggest uranium producer, have tremendous run in July and August. It was under $16 and went up to 27. It's a nice move. So it is similar to a Reddit type play or whatever, momentum play, I believe. It's, I guess, sort of the things happening all across, the financial markets in one way or the other. And that's the story, is this ETF has helped attract buyers into uranium. The problem from my perspective is, I missed the boat. I didn't think this until last week. So it's already gone up, and, if I would have figured this out 2 months ago, I would have bought and made a lot of money, but I didn't. So to me, it's too late to try to get in on this.
Mike, we've talked about in the past, the cocktail party conversation. If everybody's talking about it, it's too late to get into it.
Yeah, that's how I feel about it. But, what I would need to see to want to try to get into it at this point is the prices go sideways in base for weeks, several weeks at least, and then turn up. You know, it's coming off the high now, but I mean, it's possible uranium prices can base out and then have another run up. But I would want to see that unfold on the charts. Otherwise, I feel like if I try to buy or even short it or do something now, I'd just be guessing.
Now, what's going to happen to these Robinhooders who have seen stuff do nothing but go up? Of course, they've seen their favorite little meme stock skyrocket and then come back down to earth. Are they in for a rude awakening if we have a major market correction in October or November?
Well, I definitely think so. I don't think we're really going to get a correction for a couple. You know, maybe it starts in November, but I don't think it's going to start next month. But if you look at the list, you know, these top 100 most owned Robinhood stocks, most of them are now lagging the stock market. So stocks that lag the market, when the market does correct, tend to go down twice as much at some of them. They really fall terrible. So I think that's probably what will happen. And two ETFs, I think, typify what the holdings are of Robinhood people are the Buzz ETF, which is designed to basically hold the stocks that are most talked about on social media, and it's lagging the stock market averages. And then Kathy Wood's ARK ETF, because many of the Robinhood stocks are popular stocks owned by Robinhood people she owns, or vice versa. They like to buy what she owns. And that ETF is also badly lagging the market averages. So if you just use them as proxies, I believe they're set up to decline significantly when there is the next stock market correction. And now we also have more information from the Robinhood company itself. As they've went public, they're having to put out quarterly statements and more detailed about their earnings and projections, and we'll find out more in the next couple of months. But it's also worth noting that almost the vast majority of people with Robinhood accounts also own crypto. So a decline in the crypto market, which I think is also in the cards, would also hit them. In fact, Robinhood has guided people into buying crypto. I created and opened up a Robinhood account to see what it was like, and when you load it up, the first thing they show you is crypto. You click it and you see Bitcoin and all these other things, different cryptocurrencies, and at least half the Robinhood accounts, the number's higher, I think it's close to 70%, own some crypto one way or the other. And today, they just announced that they're going to create wallets for people so they can, buy crypto and transfer it to people with crypto accounts, and like I guess Coinbase does. So they're really going all in on that. And I think it's when crypto declines, I don't think it's going to be a decision that may be attracting customers and benefiting in the short term, but I think in the long run, it's going to be a bad financial decision for the Robinhood company. When the stock market fell 20% in 2018, crypto crashed. And it did the same thing last year. When the stock market fell over 30% with the COVID breakout, crypto completely crashed. So it's not a safe haven. It crashes when the stock market goes down. So a stock market correction will wipe out many Robinhood account holders.
Mike, thank you so much for chatting with us, and good luck in Las Vegas.
Thank you. Great talking with you.
Mike was reporting to us from Las Vegas today. My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, we'll ask that question for you the next time we talk to them. If you send your question to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.